Well, actually, I think Hon Hai is well positioned for this AI theme, if you like, because if you recall, semiconductor has been a very major strategic, area for the company. And speaking of server, actually, Hon Hai has about 40% of the server, market share, of which one-fifth is in the AI server. So with triple-digit growth, I think this is, outside the market expectation. Would be a good catalyst, for the company. But having said that, we have to also remind on the stock level, the net margin of the company is between 1.5 to 2%. So hopefully, this AI theme will boost, the bottom line of the company.
But it seems like they're betting on the expectation that investment into new server capacity to cope with demand for AI is going to happen tomorrow, that there's going to be a massive surge of buying and they're going to profit from that. Is it going to kick in quite that fast?
I think the kick-in would be in the second half of this year. The order is usually 3 to 6 months ahead, if you like. If you look at the order from NVIDIA, actually it's increased already. So from my expectation, this is not too early. I think if we want to play the AI theme, Hon Hai is one of the company to be in. But the key we have to consider is the contribution of this business. Because if you recall in Q1 earnings, they also announced the asset impairment from the display industry, sharp, if you like, and also slowing down of iPhone. So I think there is a mix of kind of like upside and downside for this stock.
William, as we watch Hon Hai diversify its portfolio, moving from smartphones to that of electric vehicles as well as AI servers, also the diversification of its factory plants. Of course, they were heavily invested over in China. How are they doing in the diversification in this aspect?
I think they're well positioned. In the early days, it's called China Plus One strategy, and now it's rebranded into BOL kind of like strategy, like the EV factory in Thailand, the EV bus factory in Indonesia. And I think this is it's very early. For example, for Thailand, the first car production is expected to be finished in 2024. But having said that, this type of hardware company, they need at least 3 years of planning before the first, product being outcome. So I believe the company is well positioned in diversifying the production base from China. And secondly, I think it's also compensating the long-term weaker demand or the dependency on the traditional product. So there is some transition, for the next year or two. But this is good for the long-term kind of like company growth. In terms of valuation, the stock is trading at around 9 times price to earnings ratio. Historically, it's between 8 to 13 times. So I believe right now is a good kind of like entry point, given it's more stable compared to a lot of the so-called hot themes in the market that is built on concept, if you like.